Hello folks, this is Dave Richmond with Richmond Brothers with our November 2013 economic update. In this month's video, we'll discuss some of the important events that moved markets in November. We'll also talk about what investors can expect in the days and weeks ahead. Please read below for the required disclosure statement. November turned out to be a banner month for stocks. This was welcomed relief to investors after the volatility of October. Markets tallied their third straight month of gains, and the Dow Jones Industrial Average and S&P 500 closed out the month on an 8-week winning streak. For the month, the S&P was up 2.79, the Dow gained almost 3.5, and the Nasdaq gained just over 3.58%. Economic data caused a lot of volatility in November. Investors got their first look at third quarter GDP estimates, which showed the economy expanding by 2.8%. Much higher than anticipated, though overall spending was still anemic. The October jobs report showed that employment increased more than expected, though the unemployment rate ticked up to 7.3%. So far, it's hard to know how the government shutdown may have affected those numbers. We'll have to wait a few months. Earnings season's wrapped up in November, and our overall verdict is that third quarter earnings have been pretty good, especially relative to the last few quarters. There still isn't a lot of growth out there, but company management is doing a remarkable job of under-promising and over-delivering, leading to some solid earnings reports. Estimates for total earnings growth suggest that the S&P 500 companies were able to eke out 4.9% earnings growth on 3% higher revenues. As we've seen in previous quarters, companies are delivering a lot of their profits through cost-cutting measures and productivity increases, which will hopefully benefit them when demand turns around and comes back. Although we don't have solid data about Black Friday yet, the National Retail Federation estimates that approximately 140 million shoppers hit U.S. stores over the Thanksgiving weekend, slightly more than the 139 million that turned out last year. Holiday shopping accounts for about 20% of retail sales for the year, which puts the pressure on to get consumers through the door. 2013 is unusual because there are fewer shopping days, less than 30, between Thanksgiving and Christmas, and retailers are slashing prices to attract shoppers. While it's hoped that these efforts will bring in more business, it could have significant effects on retailer margins. As we move into December, traders will be monitoring economic data closely before the mid-December Federal Reserve FOMC meeting. The Fed has repeatedly stated that they intend to let data guide their decision about tapering. What this means is that positive economic data may cause investors to pull back in anticipation of a December taper. Although we hope the market rally keeps up through the end of the year, volatility around the FOMC meeting and anticipation of the next round of budgetary debates in Washington may make it tough for stocks to continue their winning streak into December. As always, we'll continue monitoring events and work to place our clients in the best position for success in the new year. Once again, this is Dave Richmond with Richmond Brothers, signing off for the month of November 2013. I hope you found this commentary interesting and informative. We'd love to hear what you have to say. Please contact us with your comments. If you have any questions about what you've heard in this update or would like to discuss your personal financial situation, please give us a call at 517-536-5000 and we'd be happy to talk to you. Thank you and have a great holiday season.